Melanie, I've been looking forward to this because yacht finance is a really interesting subject. How did you get into the field of financing super yachts?
Oh my God, that's actually a very long story. We might save that for a
We
different
have time.
day. Oh, we do have time. Okay, so I grew up on boats. My father was in the Navy. He loved boats and he wanted his kids to grow up on boats. And I just had this natural passion for boating and yachting. That was our lifestyle. But when I got out of college, I fashioned myself to be the next Jacques Cousteau. I wanted to go into marine biology. But at the time, there were literally zero opportunities. And I ended up taking a very clerical position with a company, a big firm, NOAA, National Oceanic Atmospheric Association. And at the time, that job paid $165 a week. And I'm like, I will never, ever be able to afford anything, being a researcher, right?
Yes.
So I have to have a part-time job.
Yeah.
So I had a part-time job in retail, which metamorphed into a full-time career in retail for over 20 years. Quite successful, a lot of travel, everywhere, 40 weeks a year on a traveling.
Good.
And then 9/11 occurred. And I was actually in the air on the morning of 9/11 on my way to New York.
Oh, right.
So they landed the plane in Philadelphia. And, that's where but they kept us on the plane for hours. And so around 11:30, they let us off the plane and we were starting, cell phones weren't ringing. Nobody knew what was happening. We randomly heard a plane hit a building in New York. And what? None of it made any sense. So they escorted us out of the airport to a holding area where we learned what had occurred. And, it was just kind of a devastating thing. And I started a single mom, traveling 40 weeks a year. I kind of assessed that my life was going to change dramatically.
Yeah.
And I'm like, I need a day job. I need something where I'm boots on the ground, 9 to 5, Monday through Friday, no weekends, no Saturdays, no holidays, no travel. What can I do? Oh, I know, I can be a banker. So as luck would have it, as I kind of digressed down this new path, I was welcomed into the amazing world of not only banking, but yacht financing, where I could combine two passions.
Well, I'm glad you did tell the story because it's an amazing story. That must have been quite traumatic, though.
It was devastating.
Awful situation.
Was devastating. Yeah. Imagine, I left Fort Lauderdale at 6 a.m.
Yeah.
Daughter in the care custody full of good hands, going to school, mom off to New York for a business meeting, leaving on Tuesday morning, coming home on Friday. No, that's not what happened at all. So
I think sometimes all kinds of traumatic events can be a catalyst to big changes in your life.
So here, that was 9/11, and here I am, been in the industry ever since.
And now you specialize in yacht finance.
I specialize in marine finance, which encompasses both boats and yachts. So we have kind of two sides to our business. Yeah. The boat side, which is way more transactional, and then the yacht.
Okay, we briefly touched on this off camera a little bit earlier. How would you define the difference between a boat and a yacht?
Well, there is a technical difference, but when it comes into from the boating side of it, from the banking perspective, we're really looking, disregard size because it's size of loan to a bank. It's the money factor.
Sure. Yeah.
So, figure that boats, an Intrepid can be over $1 million these days, a center console boat with 4 engines on the back of it. Yeah. So, so the banks look at it and they say, $2.5 million and up, $2.5 million and under $2.5 million.
Oh, that's the dividing line.
Each bank has a slightly different assessment as how they look at where they break their pricing and their level of scrutiny and how much due diligence they require. But, we look at it, it falls into different buckets. So there's and I'll take it into small increments. We have a division within our Newcoast company that deals with very small boats. It's like buying a car. It's just one piece of paper. Sign the piece of paper, give us your personal history. Here's your approval. Very simple, right? And that's basically up to $250,000 on one piece of paper. Now you're pre-approved for $250. Go buy your boat.
I'll never forget one of the first times I ever went to the United States. It's Fort Lauderdale. I was in the Galleria Mall, and in the Galleria there's the big sort of central area there, and there was a Sea Ray in the mall,
Yeah.
and it actually said on it, it said the price, and then it says available for easy payments. So wow, my goodness, the United States of America is amazing. You can buy a small yacht in a shopping mall with easy payments.
Oh, that's so funny.
So when somebody approaches you and they say, I want to buy a yacht and I want to finance it, what are the criteria that you're looking at from the client's point of view?
Well, again, first thing, everything seems to start in our business with KYC, know your customer. So what kind of a boat, what size boat, previous boating history, purchase price, loan to value, how much cash do you want to put in? So there are specific hard, fast, non-negotiables from the banking perspective. And so, and it goes in buckets. So again, we'll take a $2.5 million boat. You can finance that with as little as 20% down. Some people may want to put more down. You may get more favorable terms with more equity into the deal. Then you'll go to the next bucket, 2.5 million to 5 million. Okay, so now some banks want 30% down, some want 35% down. Now you go into the next bucket. And so as you go into the larger yachts, the equity position is going to increase. Why? Because of risk factors. Certainly, and you will use your Sea Ray analogy. A buyer defaults on a Sea Ray, they can flip that boat from a banking perspective. It's going to, fairly easily. It doesn't cost them a lot to dock it, store it, captain it, maintain it, insure it. Now let's get into a super yacht. What happens if that defaults? Right? And so the bank, they want to be safe in the transaction. So we want 50% down. Now our equity position is clear. Something happens to that boat. We have the financial capacity to sell that boat if we have to at auction, make sure it goes away quietly, and have the equity position to maintain that vessel without loss to the bank. It's all about loss.
And typically, how long a period are the repayments over?
As long as 20 years.
Oh.
As long as 20 years, which is amazing because in Europe, everything seems to be based on pretty much a 7-year lease, right?
Yes. Yeah.
Right. So, 20-year amortization. And even within the 20-year span, if somebody wants to finance it for 10 years or 5 years or 7 years or 15 years, there's different reiterations of what that loan can look like, more favorable interest rates. So again, I want to know from the customer, my customers, what is your intended use of the vessel? How long do you intend to own it? What's your thought process going in? What's your thought process coming out? A lot of customers may be looking at the boat as a bridge to something bigger that's being built. And so get me something that is interest only. I'll put a chunk of money down, and I don't want a prepayment penalty. I'm only going to have this boat for a short period of time, and then I'm going to move into the next purchase. So it's understand what they need. What are your needs? What is your goal? And then we can kind of work backwards from the sourcing to deliver the product that is more custom to what the buyer's needs are.
And are all of your clients American citizens? Do you do business in Europe as well?
So from a lending capacity, it's limited in the United States, banks that will lend to non-U.S. citizens. There is some financing available. And so it is based on country of risk. So would they lend to an EU citizen? Probably. Would they lend to a higher level of country of risk? No, they would not, right? So we have some sourcing for international clients. We do a lot of business with Canadian citizens. We do business with clients from Mexico sharing our border. So and those packages look vastly different than a package you would get from a United States citizen. Why? Because the tax records are different, so that we look at different risks. And again, those boats that are to non-U.S. citizens have a much higher equity position to keep the bank safe.
Which kind of is understandable, really, isn't it?
Yes.
Because it's very difficult if they take the yacht off to, I don't know, the Galapagos Islands or something.
And the cost of bringing a boat back and finding a boat, sometimes they disappear. And less and less of that. Much higher level of security and tracking are required by the bank than ever before.
Do you have any statistics on how many yacht owners finance versus people who just pay cash?
That's a wonderful question.
The only sort I ever ask.
It's terrific. I don't know that our industry has ever done too much deep dive into that, but in theory, they think more like 1 out of 5. And again,
1 out of 5 does finance.
And again, I'm talking on the yacht side. On the smaller boat transaction, it's like buying a car. The penetration could be 80%, right? It's so easy. And that's the whole thing. To get into boating it is an easy way to get in.
Yeah. I've had, when I was doing brokerage work, quite often we'd have an offer on a yacht accepted. You start to get very excited that the offer's accepted. And then you hear the client's just getting his financing sorted out.
Oh, yes.
And that's like the kiss of death, because then you know that if he hadn't got it sorted out before, he's not going to get it sorted out now.
I can so appreciate that comment that you just made. And I tell my customers, they go, I'm coming to the boat show, I'm going to go find a boat. And I'm like, well, let's get you pre-approved. Well, no, it's okay. I'm like, no, it's not, because transactions tend to move quickly.
Yeah.
And to get you pre-approved so that you know gives you a stronger negotiating position to go into the transaction.
Yes.
You know you're pre-approved. Yeah. So one of the things that is required to get that pre-approval is we kind of need to know the size of the bucket. We need to know what the collateral is. You know, are you looking at an old boat, or you're looking at a new boat? Because again, for financing, the banks do care about the collateral, and it's harder to get a boat financed that if it's over 20 model years than under 20 model years. And the pedigree of the boat definitely matters. I mean, you're going to finance a high pedigree boat that may be older than 20 years much easier than you will something that's kind of a no-name or doesn't have the pedigree value to it.
Yeah, it's interesting. We were talking to Laura earlier, as you know, about the insurance, and it's a similar thing with the insurance too, isn't it?
We work hand in hand.
I imagine that you
We do.
Yeah.
It's very crucial. Both pieces come together very at the same time.
So if I come to you, I qualify, I get through my KYC, that I'm not a terrorist or a money launderer or anything like that, and I qualify for 10 million. And I come to the Monaco Boat Show, which, by the way, is where we are at the moment. Well, not at the show, but we're close to the show right now. And I've told you that I want to buy a brand new Ferretti, which is a well-known brand. So you've got some security there. And you've approved the finance. But as I'm walking around, I see this gorgeous old Benetti from built in 1980. And I go, you know what? I love it. I'm going to buy it. Would you send somebody to look at the yacht, or what sort of information would you want from me for that?
Terrific question. So the pre-approval is good for the customer. Okay, we have done our due diligence on you. We've issued a term sheet to you, subject to inspection of the vessel. The vessel changes. Yeah. We basically have to go through a substitution of collateral. The bank may not like this boat, but let's say it's undergone a major refit recently. Okay, and so it's still going to have to go through a complete and total survey. Any boat that is older than 2 model years, no matter what, has to go through a complete survey. So that's on the customer. Yeah. And then they're going to, what we'll do first is go to the bank and say, listen, customers approved on boat A, they're looking at yacht B. Yeah. So here's the information, here's the spec sheet, here's all of the information. What do you think? Rather than, and then we'll get a consensus from them that they may not want to lend as much. Gotcha. So you may have been pre-approved for $10 million, but on this boat, even though the pricing may be similar, maybe we're not comfortable. We want to be a lesser number. So that will play into it. But pre-approving the customer is so essential because regardless of the vessel, we have just taken the most important part of it out of the equation. Are you financially capable?
Yes. So just because somebody can pay something, it doesn't mean to say necessarily they should.
Correct.
And in a sense, if I was a buyer, particularly if I was an inexperienced buyer, I'd kind of be grateful that the bank is saying to me, look, we'll give you the money, but not for that boat there. It's really what you're saying, isn't it? Yeah.
That happens. And you brought up another point that's extremely important as well, and that is there are barriers to entry into this market. Yeah. And prior boating experience, particularly in today's economic climate, is one of them. Because it's one thing to be able to afford and be pre-qualified for the loan, but that is the easy part of owning a boat.
Oh, yes. Yeah.
Right? Make your payment on your boat, that's easy. Yeah. The other associated costs of ownership to a new boat owner are sincerely, a wake-up call, right? Yeah. You're like, they have no idea what they're getting involved in. But the banks know.
Yes.
And so they're like, no. That's too much boat for
We
him
have
for
an
boat number
expression,
one.
we say it's not the price of the elephant, it's the cost of the hay. When yacht ownership is like that, isn't it? So, now, two questions that I want to ask you. First of all, for new yacht owners who are looking at financing a yacht, what advice do you have for them?
Start early. Engage with a professional finance person early. Let's do some due diligence. Let's have some honest conversation, good dialogue as to what your goals are. Is this an entry boat for you? How will you use it? Will it be chartered? Will it be owned in an LLC? Where are you keeping it? Where do you live? Absentee ownership is a big part of it on a non-crewed vessel. On a crewed vessel, it's not so much of a concern because you have somebody who's got care, custody, and control at all times.
So I guess actually the very first step should be sorting the finance out before you really seriously go even shopping at all.
Absolutely.
And second question I'd like to ask you, because a lot of people watch YouTube yacht videos because they want to get into the industry, and yacht finance could be an interesting career. So what would you recommend for young people or even not so young people who want to get into the yacht finance business?
So it is a wonderful, wonderful specialty lending business. It's about relationship and networking. We are always looking for new talent to bring into this business. A great mentorship program. So, and the best way to do it is to learn right alongside someone. So, I've actually been mentoring someone that I'd like to see come into the industry. Yeah. And so what we do is we start with a small, little pieces. Okay, so here's $150,000, $200,000, $250,000, which is a lot simpler to understand. And then as it grows, it evolves. There are like industries that work very well with our industry. Yacht financing pairs well with aviation financing. Yes. So that's a great ground for a crossover business.
Yeah. Excellent. Well, thank you very much indeed. Really enjoyed talking to you.
It is a pleasure. So thank you so much for having me.
I enjoyed it very, very much.